Welcome back, everyone. EUR/USD seems to continue its gradual descending, which is displayed within the downward channel on our chart. The currency pair has tested the S1 117.85 support for the second time in July, just in the past days, and has even reached lower, implying the bears continue to be in charge for the time being. If the currency pair continues to move downwards and breaches the S1, then the S2 117.45 line and lower the S3 117.05 could become the next targets. However, with some controlled bullish appetite observed today, the 15th of July in the early European morning, the trend could be changing momentarily. In this case, the R1 118.80 level could be approached first, as this is a level that was tested multiple times in July and can be used as an indicator for further bullish action. Higher, the R2 119.20 line and the R3 119.60 support are levels that were tested previously in June and could be reused if the bulls are strong enough. We continue to keep a bearish sentiment in mind for this pair, even though some sideways tendencies could also be in the picture, with the RSI indicator currently running on the 50 level. Traders should be on the lookout for the 16th of July, when the Eurozone inflation data for June is to be released. Moving to GBPUSD for our chart, cable has been moving within the sideways motion between the R1 139.05 resistance and the S1 137.55 hurdle, which is highlighted with yellow on our chart and has formed since the end of June. In our opinion, these levels can be used as guidance for traders seeking a breakout movement to place orders. If the pair moves downwards, then the S2 136.70 level and the S3 135.75 could be stop points for the bears. In case of an upward movement, the R2 140 level and the R3 141 represent possible triggers for orders. Overall, we tend to keep a sideways motion bias for cable, as the R1 139.05 resistance and the S1 137.55 hurdle have proven to be very solid. Looking at the cable daily chart, we note an even larger sideways range between the R3 141 level and the S2 136.70 level. Moving to EURCHF daily chart. Now the chart is characterized by a downward trend line noted in yellow on our chart. Yet the latest movement of the currency pair testing the S1 107.95 level implies the trend may be strengthening, with more selling orders being placed. Also, the pair has dropped into levels previously seen towards the end of 2020, with the S2 107.40 and the S3 106.80 being possible targets for the bears in this case. Our ATR indicator below our chart remains nearby 0.0038, possibly telling us the trend could be sustaining for the time being. Another factor we consider important is that the 50 and 200 moving average lines we have placed on our chart seem to be getting closer to each other, while the first seems to be turning lower, which implies extensive selling may be in place currently. If the currency pair is to rebound upwards, then the R1 108.55 may be tested first, and if broken, could make way for the R2 109.10 to come into play. Our highest levels for this analysis is the R3 109.70, which, if breached, could signal a trend reversal. Once again, traders should be on the lookout for the 16th of July, when the Eurozone inflation data for June comes out. Moving now to our final chart. This is GBPCAD. Evidently, the currency pair's 4-hour chart shows an upward momentum that has formed since the start of July. The uptrend is highlighted with the yellow lines forming a channel to the upside. Also, the 100 and 200 moving averages seem to be diverging and remaining below the current price action, possibly implying the bulls are still in control. For the upward trend to be breached, then the S1 173.15 must be broken. Moreover, the 100 moving average has crossed to the 201, implying the buying orders have seen some increase in the most recent sessions. If the bears take control, however, we might be seeing some movement towards the S2 172.55 support, which was tested on the 14th of July. On the contrary, in case the upward trend continues to unfold, then we could see movement towards the R1 174.20 or even higher, the R2 174.80. For the time being, we keep an upward movement with sideways tendencies as our outlook. Traders should keep in mind the 16th of July, when the Canadian housing starts for June and the wholesale trade for May could create volatility upon release. Closing with a short note on the US dollar, traders should be aware of the US retail sales for June and the preliminary University of Michigan sentiment for July, both to be released on the 16th of July. In the past days, the greenback weakened against a number of its counterparts, while US stock markets gained, as did gold, after Fed Chairman Jerome Powell struck a dovish tone in his testimony before Congress. Thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. Please note, as an effort to support traders on as many fronts as possible, we are now presenting live weekly webinars on trending subjects, and all our subscribers are welcome to participate. From everyone here at IronFX, wishes for solid trading.